Senator Kirsten Gillibrand, thank you very much for joining us.
Oh, my pleasure.
Republican Senator John Boozman, who chairs the Senate Agriculture Committee, unveiled updated legislative text on crypto market structure last night. Now, the text builds on a previously released bipartisan discussion draft that would give the CFTC new authority to regulate digital assets. Now, in a statement, Senator Boozman acknowledged that differences remain on fundamental policy issues. You're not a member of this committee, but have been involved in bipartisan discussions working on crypto market structure legislation. And so I'm wondering what you think about this text. And do you think the bill stands a chance of advancing, given a deal with Democrats couldn't be reached?
I do. I'm actually very optimistic. Senators have been working on a bipartisan basis for the last 6 months pretty intensely. And we have two different bills. There's one in the Ag Committee, which has oversight and accountability over the CFTC. And the second piece of legislation is at the Banking Committee, which has oversight over the SEC and banking issues. And so, because these types of digital assets have some characteristics of both commodities and securities, you need regulation under both those committees. So, we have two different bills that are being written and worked on simultaneously that address different parts of this market structure. And I think both senators on the Banking and Ag Committee are working in a bipartisan way and in good faith.
Yet, the markup on the Senate Agriculture Committee's crypto market structure bill is scheduled for Tuesday. The Senate Banking Committee's hearing on market structure was supposed to take place last week, but was postponed at the last minute following opposition from the crypto industry, including Coinbase. So, what do you think happens to the Senate Agriculture Committee's hearing scheduled for next week? Do you think that's also at risk of getting postponed, especially since Senator Boozman acknowledged that differences remain on fundamental policy issues?
There's still areas that need to be worked on that need bipartisan resolutions, but I think they will move forward with their markup this week. The Ag Committee issued a draft late last night that people are now reading and reviewing, and hopefully the senators will work on a bipartisan basis to amend that draft, to make it stronger, to make it better, to continue their negotiations in the areas where there wasn't resolution. There was an earlier draft of the Ag Committee that had a lot of bipartisan compromises in it, and some of those compromises were left out. So my hope is that those senators can get back to the drawing board and try to re-include some of those compromises that I thought were very strong.
The Senate Banking Committee's version of crypto market structure legislation was contentious, with reports that Coinbase withdrawing support for the bill is what ultimately led the committee to postpone its anticipated markup hearing. Is there any validity to that? Since you're on the inside, I'm wondering if you have any insight into what ultimately led to the cancellation of that hearing.
I think it was simply canceled because there was more work to be done. And the senators who have been invested in this process have really worked on a good faith bipartisan basis continuously. And I think the reaction of one market stakeholder, one market participant, while those suggestions were important, the truth is that it just means there's more work that needs to be done. And there are a lot of open issues and there are a lot of things that need to be resolved. But I strongly believe that there are bipartisan solutions to resolve each of them. And I think that once those are resolved, they will schedule another markup. I think it just shows that there's still things that need to be ironed out. And I'm optimistic we can get to good bipartisan answers to those questions.
Yeah, and Senator Tim Scott, who chairs the Senate Banking Committee, and executives including Coinbase CEO Brian Armstrong have said that negotiations are continuing.
Mhm.
But where does everything stand right now with the Senate Banking Committee's crypto market structure bill? And are you optimistic we could see clear rules of the road for crypto become law here in the US in the near future, especially
Mhm.
with all the disagreements in the mix?
Yep.
What would you say is a realistic timeline?
Well, I do believe we will reach a resolution. It is very important for the US economy that we have rules of the road for this industry. Cryptocurrency, blockchain technology, digital assets provide enormous opportunity for the 30% of Americans that are unbanked or underbanked. because it provides access, easy access to different assets of value, to be able to send value worldwide instantaneously. The rails on which cryptocurrency operates are very different than existing banking rails. And so the need for this market structure regulation could not be more important. We need these rules of the road so participants know how to do things legally and appropriately. We need to have consumer protections so that newcomers into this industry and into this market know what they're buying and what the relative risk is of what they are buying. And consumer protections and disclosures will give that protection for participants. It also gives protection to the market players and the ecosystem so that people can begin to rely on this market. New York is the world financial capital market. It is the center of financial services. And I want to make sure that cryptocurrency and digital asset participants can thrive in the United States. I don't want to see those assets and those businesses go abroad because we just don't have reliable regulation here. If we write good regulation, if we write good laws, then companies will locate here, our consumers will be protected, and New York can maintain its leadership as the center of the world financial markets. And so there's so many reasons why this must get done. And I do believe that both the Democrats and Republicans who are part of this working group will get to a very good bipartisan result. They just need to keep working. And I'm optimistic that for each of the issues that are outstanding, and there's a handful of them, that we will find appropriate and strong resolutions to those issues.
And what's a realistic timeline in your view for these issues to get ironed out?
I think the people are going to keep working over the next few weeks. I think this is a timely issue. People want to get this done now. And we've been working so hard and so intensely for the past few months that I think that intensity level is going to continue. And I think we will get to a resolution that is bipartisan on all these issues. I think that there are senators on both sides of the aisle who still have questions, who still have concerns. And we're trying to make sure that all those questions and concerns are being addressed.
Now, one major point of contention for Coinbase CEO Brian Armstrong in the Senate Banking's crypto market structure bill issue over stablecoin rewards. The Senate Banking Committee's text would have prohibited stablecoin issuers from offering rewards for holding stablecoins. Instead, those rewards would have to be offered through the completion of a transaction or something like a rewards program. And that's, a win for the banking industry, which urged Congress to close what they deemed a loophole in the Genius Act that allowed intermediaries to pay interest on stablecoins. Banks have argued that this would lead to a flight of deposits from the insured banking system, potentially threatening financial stability. Some crypto companies, especially Coinbase, have been fighting back against that claim. Now, you were the lead Democratic senator on the stablecoin bill and helped guide the Genius Act through to final passage. And now there's a federal framework in place for stablecoins in the U.S. So what do you think about banks trying to change what they call a loophole in the Genius Act?
So we were pretty clear in the Genius Act to say that if you're offering stablecoins, that you were not allowed to offer interest. And we had very strong language to that effect, that we were fine with rewards and points and other programs, but that you couldn't be offering interest like products on stablecoins. And the reason for that in the Genius Act was really simple. We wanted to give, one, a chance for this industry to get on its own 2 feet, to show that they can follow the rules of the road. We didn't want to see deposit flight from our banks. We wanted to make sure that no consumer was confused about what a stablecoin is versus what a dollar sitting in a bank account is, because stablecoins are not FDIC insured. They aren't bank accounts. They don't have the same protections. Whereas we put different protections in for stablecoin. We made sure that every stablecoin was backed by a US dollar or a US dollar equivalent. And so we thought the compromise and the language that we concluded with in that bill was very strong. Some Democrats and Republicans, some industry participants have said that the industry has found a way to subvert that design. And so we are looking at those questions, and I think the concerns are still the same. They don't want to see deposit flight. They specifically want to protect small banks. They want to protect local banks, credit unions, those community banks that are essential for lending in small communities and also essential for mortgages and small business loans. And so they don't want the confusion between what products are being offered and what level of risk they may or may not have. So the argument's still the same, and I'm optimistic that we can find some common sense, bipartisan language that satisfies everyone's concerns on this issue. I thought we had done that in Genius, but if it needs more work, we will keep working.
You have been working on crypto legislation since 2022 when you and Senator Cynthia Lummis introduced the Lummis-Gillibrand Responsible Financial Innovation Act, which is a bipartisan framework for crypto regulation. You're a big crypto advocate on Capitol Hill, along with Senator Lummis, who announced last month that she will retire at the end of her term this year. Now, you have worked together on a few bills tied to digital assets throughout the years and often appeared with Senator Lummis on CNBC to discuss those endeavors. So what does this development mean for your crypto efforts?
Well, it's a huge loss to the U.S. Senate, and it's a personal loss to me. I've very much enjoyed working with Senator Lummis. She's one of the smartest, most capable, and honest people I've ever worked with. She's a magnificent senator and has worked very hard on this one piece of legislation with me for a long time. So it will be a loss for both the Senate and me personally, and for Wyoming, I'm sure. But I'm confident she'll find other ways to serve and lead, and it certainly won't change our relationship.
And I'm sure many in the industry hope that it certainly won't change your crypto push and your advocacy for digital asset regulation. Is that accurate?
Absolutely. I'm very committed to this because I do think it provides access to capital that the traditional capital markets does not. I also think it gives opportunities for entrepreneurialism and innovation. It creates enormous new opportunities for small businesses and new businesses, and it expands the ecosystem of financial services into multiple technologies and into multiple participants that have been previously not been part of that. And so I just think the opportunity to help people who need access to capital is real. I think it addresses a huge population that is unbanked or underbanked. And I do think it creates opportunity for cities and states like New York and for the United States. And again, I don't want China or Asia or other parts of the world to have the benefit of these industries because we are unwilling or unable to regulate it. That's an absurdity. So if we want to protect consumers and we want to protect the traditional financial services, the best way to do that, to help consumers and to help people and businesses and entrepreneurs, is to regulate it. It's the one thing that actually makes it possible to compete worldwide. If the United States becomes the most stable market, the most reliable market for cryptocurrency and digital assets, businesses will flock here. And all that tax base will then be in the United States. It's a win-win-win. So we have to do our job, stay at the negotiating table, keep working on a bipartisan basis, and get a good regulatory framework done.
So what are some of your other legislative priorities as it relates to digital assets? What happens after the issue of crypto market structure is behind us? Are any other bills tied to crypto in the pipeline?
There's a bunch of others. We're really working hard on issues related to illicit finance and how we make sure that terrorists, terror funding, other illicit finance, drug funding, weapons funding isn't able to use the crypto markets as easily or as readily. And so a lot of the work we're trying to put in this bill will be to address illicit finance, but I imagine there will be more things we can do in that space. I think there is an untold amount of things we can do to strengthen FinCEN, to strengthen anti-terrorism work, to strengthen law enforcement. And I think there'll be more work to continue to work there. I know there's legislation to do taxes. I know there's legislation to do other specific things in this space that is bipartisan. We're going to try to include as much of that in the bill that we can, either the banking side or the ag side, or when we put the two together and have a manager's package, we're going to try to include as many of these other issues as possible. But I'm hoping that we will continue to work on this. And it's going to take time. You have to remember, this is an issue of first impression. We've never written laws about this industry before outside of the Genius Act. And so we have to write rules of the road, or this industry will go abroad for good. So I'm hopeful that we will get our job done and protect consumers, protect innovation, and be able to increase access to capital and really shut down illicit finance by many of the things we're working on right now.
And we certainly will continue to follow your efforts. Last question for you. You're planning to introduce legislation that would ban lawmakers from trading or owning individual stocks. Would you consider banning lawmakers from crypto trading as well?
So my hope in that is that, while you are a member of Congress or a senior administration official or the president or the vice president, all of us get access to a lot of non-public information. And I don't think you should be buying or selling stocks or crypto or any type of asset on the market with that non-public information. And so traditionally we've required disclosure. We had the Stock Act over the last decade, but unfortunately when it comes to buying and selling stocks, members of Congress are doing it. 1 in 9 are buying and selling stocks, but only, 1 in 3 are buying and selling stocks, but only 1 in 9 are actually disclosing those purchases. So they're not following the disclosure regime that we have. And unfortunately, members of Congress, or maybe fortunately for them, they have a 17.5% higher return rate than the S&P 500. So clearly, members of Congress aren't necessarily smarter, but they are trading on non-public information. So I think if you can ban the buying and selling of stocks and digital assets during the length of their service, ideally we would do that. I don't know that we have bipartisan legislation yet to do all of that, but we're working towards it. And I certainly hope that in this bill we can make sure that people in power, members of Congress and elected officials, do not get to be issuers, do not get to be making money off of this industry. It's contrary to existing laws, contrary to the Constitution, it's contrary to campaign finance laws, it's contrary to ethics laws, and having an interest outside of serving the public. People don't have a lot of faith in Washington these days, and this would only allow them to have less faith if people are buying and selling based on non-public information.
Senator Kirsten Gillibrand, thank you for your comprehensive insight into all your legislative efforts, especially as it relates to digital assets. It was such a pleasure.
My pleasure. Thank you.